All right, folks. Welcome to this week's Forex commentary and market review. Um, yeah. So again, last week I told everyone that a friend of mine had this trade journaling software. Is building this product is building, and I asked if I pleaded that everyone should follow the link in the description to access the tool and make use of it, test it so that he can get data off of your testings and make the product even more better, right? And just in case you're just listening to this ad, okay, it's free ad. He's a friend of mine. I've known him for years, and I'm gonna link it again in the description so that more folks can use the product. And please help him. He's doing something incredible, and I really want him to have everything he needs to do what he wants to do, right? All right. So that brings us to dollar index, and this is the weekly time frame. And last week we talked about the fact that DXY could, in fact, return into the range because I said one of the primary ways we used to define bias is by looking at the previous candle, right? Especially if you want to define the weekly bias. And last week we understood that the markets took out buy side here and the candle stayed indecisive, meaning markets could absolutely go either ways. Either market goes up or market goes down, depending on how Monday's trading, closes, right? And when you look at this price action now, it's kind of like interesting because I pointed out this price action here, this high, this high, this high, and this high again. Okay, at least if you take into account this high and this high and this high, you see the through drive. And when you see stuff like this, markets are likely to return into the range. Now, it's incredible because we had this breakaway gap for 1, 2, 3, almost 4 weeks, and it took about 4 weeks for the markets to return into the range. Now, one of the lessons and talking points from this kind of price action is that you want to learn that the way the markets engineer liquidity on the high time frame is by not trading from or to ideal levels. So ideally, when markets are trading, they trade off of key levels, they rebalance inefficiencies and trade into objectives. But when markets are failing to rebalance inefficiencies to trade into appropriate levels and they are running into objectives, there's a high likelihood that this market will return into the range. Now you can see in this analysis it took a couple weeks before we see the markets return into the range, and it's kind of frustrating because each of these weeks kept showing unwillingness to return here, and suddenly just one significant detail in price action as market taking out this high and this high led to price action returning to the range. That gives you perspective that you know you might be sound in your analysis, but markets can take a while to validate your analysis, and it doesn't make you a terrible trader. It just makes the market probabilistic, really, and it's actually so much to learn. But the downside of all of these things here again is that I had no trade last week. I was supposed to have a trade on gold. Let me show you what it looked like last week. And if you notice recently, gold has been, trading positively with dollar index. What I mean by that, it means it's been positively correlated with DXY. If DXY goes up, gold goes down. If DXY goes down, gold goes up for some reasons. And I know it's a short term, um, I don't know what to use, but that's what it is currently. And because I was looking at the potential for dollar index to be bearish this week and foreign currencies bullish, I was looking at gold bearish because gold's price action was pretty straightforward. I mean, we had a swing low here, and whenever we have this kinds of price action, the idea is you want to see markets run into the previous weekly high. That's the basic analysis. And then again, there is this premium fair value gap, but primary objective would always be the previous weekly high. and this was how Monday's candle traded, respecting this up candle, potentially a bearish order block. And all I wanted was for the markets to close bullish on Tuesday, and the bullish close on Tuesday above this volume imbalance. Okay, there's a volume imbalance here, the same volume balance from the weekly time frame. Okay, while the markets were making a retest of it, you notice that the previous weekly candle closed above this volume imbalance, and this candle open ran into the imbalance, trade into this previous weekly high, and immediate rebalance, and just a green bullish candle closure on the daily time frame validated buyers that we're likely to run into buy side here and potentially run up into this secondary objective. And this was the analysis we had on Discord, and we're gonna have our trades, right? And there was this turtle soup here, but by this time of day I wasn't available. Okay, the initial trade idea was to see the market close above this consecutive down close candle, which would be the change in the state in delivery. Okay, if you look closely here, you'd see the market ran close here. Okay, but they failed to close above here, so bias wasn't validated yet because we are in consolidation, right? So they ran into the range. In fact, it took out the initial low of the day, which was incredible, because if you kind of like bought any discount array within this range on this day, you're simply going to take a loss. So that's why you want validation. But as long as it took a sell side here, created this bullish order block, this would have been an entry to buy. But we missed this one and they closed here. So the idea was to buy the next candle and go gapped. It was huge gap, and it was difficult to manage stops and all of that, and we just allowed the trade. All right, the second entry would have been for them to completely rebalance this volume imbalance. I mean, that's the entry I was calling on Discord, saying as soon as they completely rebalance this inefficiency here, that we are going to buy. It's an up tomorrow trade entry for buy side here, and they only ran into it with 1 week, very very fast week, and didn't in fact completely rebalance, because the inefficiency would be from this is the closing of this candle, right? So this is where I was expecting markets to trade into for a complete rebalance of the inefficiency. And so instead they utilize entry drill, and it was very quick, so I couldn't take in any setup here again. And now the return here, someone said, why didn't you buy it? Well, I didn't, because dollar index, I said dollar index gold already met the weekly time frame objective, which is the previous weekly high, and I'm not trying to play smart currently, because I'm still finding my way back to consistent profits, right? And it's been so close for the past 2 weeks. Even if I didn't make any trades last week, it's been very very close. So the reason why I'm not even really saying so much on dollar index now is because dollar index this week is low probability, right? We have very close inefficiency here as the draw on liquidity. We have a draw on liquidity here. We have this old inversion fair value gap. But let me have this here. We have this here. Oh, come on. So we have this inefficiency here, and the idea is the markets are going to return here. Mind you, I'm still bullish on the monthly time frame, thinking DXY could potentially return into the monthly inefficiency. That's the inefficiency with the liable on the monthly time frame, which is here. I'm still thinking DXY still has a propensity to return here, but while that's very very possible, I just want to focus on one candlesticks at a time, even though everything I'm talking about leans towards the idea that dollar index is going to return to 101,977. Okay, so we have this level here. So obviously it's not like this is the obvious draw liquidity here, and I absolutely do not know how much of the inefficiency the index is going to rebalance. I don't know if it's going to be an entry drill or 50% or completely rebalance this inefficiency. I absolutely do not know, right? While we have a bullish bias on the monthly time frame, the weekly time frame apparently isn't bullish. Okay, we can see heavy sell candle, and markets are likely to make that continuation in the new week. So anyways, into this weekly fair value gap, and it only says something that this is not a short-term trade. Okay, this is only if you can scalp between the new weekly candle open and this fair value gap. That's the only setup that I currently see on that front. So here is the daily time frame. Okay, something interesting on the daily chart, because last week Wednesday, one of the reasons why gold had a gap, you can see the gap on dollar index, and even we had a setup on euro to buy, but you can see how they closed below this upwards candle, change state in delivery. So this was obvious draw on liquidity, but the market opened with a gap, and I wasn't going to force any trade after that. Okay, so we have this high here, and we have basically this inefficiency, this liquidity void, and these are the two reference points for this week's trading. Actually, there isn't so much I'm thinking this week other than these two reference points. And why I'm thinking about this reference point is that if you're a scalper, there's likely going to be a setup from here or from here. Because say the market opens and market trades bearish. Okay, if the market trades bearish into this inefficiency here, and I don't know how much of the inefficient markets are likely going to rebalance, but when we begin to see significant rejection off of this level, the markets are likely to target internal range. Now, I can be surprised, and markets can open tomorrow and market starts to trade bullish, and it means they are likely heading for this liquidity void here, and when market trades here, they are likely to return here. So I think the markets are just going to play around this buy side imbalance, sell side inefficiency, and this liquidity void. I think these are the two levels, key levels, that markets are going to play around this week. Now, absolutely, if the market intends to be bullish, then would need to be seeing a closing basis through this liquidity void, and a retest of it should send us to 101977. But ideally, I think I don't have much thoughts or much expectation for this week's trading. The market already expanded so much last week, and this week is low probability because we can see obviously it's two-sided, and not just two-sided, it's the fact that we have an apparent draw of liquidity here on the weekly time frame, the weekly fair value gap, breakaway gap, and the markets would trade here, and I absolutely do not know what dollar index is going to do next. Okay, so so Euro USD, so Euro USD, okay, Euro is my objective. Last week we looked at Euro USD through the lens of liquidity run, and talked about the fact that this auto block here could likely offer support to Euro because it's high resistance transaction between opposing liquidity pools, right? And basically that's how Euro panned out, and meta objective here, more buy side objective here. Potentially, if the dollar index keeps on trading lower, there's relatively go highs here, and nothing so much here I want to discuss on Euro because we already have everything on DXY, and we're going to use DXY to determine how Euro trades in the coming week, because DXY has a more cleaner price action I won't say cleaner, it has more details in price action to explain how its weekly range is likely to unfold. And if we can define it on dollar index, then we are likely getting it right on Euro. So I hope you found this one insightful, not too much this week, because we already traded bearish, close to objective, very close to objective. This is the draw on liquidity. So there isn't so much. I can't determine how much of this they are going to trade into. And if you're not listening to me for the first time, you understand the wisdom in, leaving everything to probability, right? So it's a scalpers market, still a scalpers market, and we're just going to see how this week trades. And until I talk to you again, be safe.